Once again, good afternoon, everyone. I welcome you all to uLaw's CPD webinar. The topic for today's session is Disbursements Demystified. It's accredited to 1 hour CPD credits. Please note, uLaw only delivers professionalism CPD credits. So you could go on your specific Law Society portal and get credits for 1 hour CPD professionalism credits. As you all see on the screen, the topic for today's session is Disbursements Demystified. It's one of the topics that we're all very concerned knowing about. It's definitely very interesting. At the same time, very challenging. We are going to be seeing a presentation where I would be walking you through how disbursements are managed from the point of aspect of a legal practice management. And we are also going to see the benefits and expectations of getting it recorded in your system, in your legal practice management system, and also the expectations from Law Society in regards to the best method to record it and the documents that you're required to generate at this point in time. Please note that, like every other webinar, we have a small agenda for today's webinar as well. The agenda for today's topic, very precisely how to manage disbursements. I'll definitely get to the point about what are disbursements and how to manage it, as well as various methods and options that you have to manage the disbursements, whether using a trust account or a general account or a business credit card or your own credit card, which is owner's pocket. We're going to see what is the best method to record them under the practice management solution that you're using. And of course, if time permits, we're going to go into details about using uLaw as a platform to showcase disbursements in the best method possible to manage the legal accounting. We're also going to see a few examples, most suitable ones for your practice in terms of billing actuals or billing for travel time or any recovery of expenses like photocopies, courier charges, etc. We would definitely discuss about few of these expenses as disbursements and examples. Last but not the least, what Law Society expects from you when it comes to disbursements. As it is, we all maintain certain documents for compliance part of it, but specifically what leads you to keep yourself compliant while using the right method and manage disbursements in the right manner. We're going to discuss that as well. Quickly jumping into what is disbursement. As we all know, disbursement in a quick layman's term, it's expense incurred for your client by your law office. Expense incurred on behalf of them. It could be any fees paid on behalf of your client for court filing fee or a small, one of those third-party expenditures that you're incurring for a process server or probably doing a photocopy and recovering that expenditure from them, or maybe sending a courier for one of your drafted documents and so on and so forth. Is, I think, more than what you can imagine that is termed as disbursement. And the proper explanation here or definition here goes saying disbursement is the act of paying out or disbursing money, whether it is from the trust account or from the general or business credit card or personal account, which is owner's pocket. Basically disbursing money such as money paid out to run a business or cash expenditures and any other amounts that a lawyer or a paralegal might have to pay out on person's behalf in connection with a transaction. And the person here is none other than your client. On behalf of your client, when you're expending or disbursing money from either trust or general as it is, respectively, is known as disbursement. And in accounting terms, it is very important to record it in the books to balance the client ledger as well as your accounting, as you will be reporting the expenditure under the respective bank accounts that you have expended it from. It's also important to maintain proper records of it. For example, if you're making a courier or sending a courier to your client, you will have to keep a copy of the bills from Canada Post along with the tracking number or any other reference number you get with it. And when you make a record in your respective books or in your respective practice management solution, we highly recommend our clients or anyone that I talk with to ensure that they are recording the reference number as one of those, copy that you're getting from Canada Post or from UPS Courier to ensure that you have some sort of reference when you're pulling out these documents. Method of payment and reference number, these are minute details, but they are highly recommended by Law Society audit terms to maintain proper books. Most of the time, we tend to avoid these minute details or tend to leave out these minute details, but from the point of aspect of Law Society audits, they are highly recommended to have these reference numbers. Now, moving on to how to manage disbursements and what does it take to manage a disbursement? What are the key steps that you will have to take in order to manage disbursement, whether it is from trust or general or business credit card or any other account? Step number one, making sure that you are recording this transaction upon the disbursement being paid as to how it was paid. We always recommend to follow your bank in this case, because there are no way you're able to make an error here. As you follow your bank, you're following this bank statement where you see a withdrawal or a credit, and you're able to see that the general account has been withdrawn with check number or bank draft number or a reference number for online transfer, anything, for your process server fee or your filing fee or your courier charges, etc. So record when the disbursement was paid, which is the date, how it was paid, the method of payment, and what was the reason, basically the description of this expense. Start with following your bank. As you see the expenditure being recorded in your bank, you classify them as a disbursement under the respective client's account and under the respective bank account too. Since you're already under the client's name and matter, recording the disbursement from the file is more relevant and more easy, where there is no chance or there is no way you could make an error by recording it any other client's file. So always start with following your bank, identifying the transaction, noting down it as a disbursement with the relevant method of payment, the date of payment, and the reason or description for this expenditure or disbursement into the right client's name and file or matter is your first step to do. These are also the key steps, because if you're able to derive at these information at the first instance, there are no ways you would be able to make an error or a mistake going forward with that specific disbursement file. Also, if it is paid from general account, please decide a few things while taking into consideration whether this is going to be with a profit motive or no profit motive. You are going to bill them an actual amount, or whether it is going in from a prepaid account of yours. Like, for example, if you take any real estate file, or if you take any other practice that involves a little bit of prepaid expenses, there is a different way to record these. You're not dispersing that amount from any of the bank accounts, but it is going out of the prepaid account. So definitely, if it is paid from general account, you need to jot down certain points, like whether you're going to charge them profit. So you have to decide what portion of this invoice is going to be charged to the client, and what is it that you are going to incur or report as an expense in your books. Likewise, whether you are going to use any prepaid account here, or you're going to recover the expense straight from the client and record the invoice for recovering the expenses. If it is trust, it is much more easier, but there are only certain things or certain disbursements that can be made straight away from trust. The rest are recommended to go from your general, but if it is going from your general, what we discussed in the previous slide about keeping in mind about the portion that you're going to charge your client and the portion that you're going to report as an expense needs to be determined at the first time, so that you are not going to record two different amounts as to what is seen in your bank is different from what is seen in your invoice is different. Making sure everything is aligned is highly recommended at this point in time. And what are the expenditures or disbursements that could be spent from your trust account? These are pretty straightforward. Since it's going out directly from trust, you would see the portion that you're charging the client is the actual amount that you have spent. There is no room for making profit here, because it is going straight from your trust. You're having to charge the client the same amount that you incurred, which means things like court fees, any filing fees, any process server fee, anything that is paid from trust, you don't have to recover the expense here. So the best part here is you're dispersing it straight from your trust. But also, the other thing to keep it in mind is there is no way that you're going to able to charge a different amount than what you have actually spent for this disbursement. So it is not your money after all that you're dispersing from your trust. Remember, it is your client's money. So you just have to show it as an expense from the trust. But at the end of the day, this will reduce the amount of bookkeeping required. Otherwise, imagine you having to spend it from your general, keep a receipt with you, and then understand or determine what you're charging your client versus what you're incurred. So there's a whole role that comes into play when you're doing it from general versus if you're doing it from trust. So just to quickly recap, paying it out of trust is 100% simple, but there are certain things to keep in mind if you are making it from trust. Only things that are actually paid, like court fee, process server fee, and one more important thing here is the method of payment, how you're making it from your trust. Mostly, people prefer doing electronic fund transfers, but when it comes to trust, the recommended format of trust withdrawal or payout of trust as disbursement is check, bank draft, or anything else that will help you to keep track of the payment easily. Because when you do a check, when you pay out a disbursement like a court fee or a filing fee from using a check, you have a copy of check with you as records to be kept in the client's file. At the same time, you're able to track down the expenditure in the later stages when compared to electronic fund transfer. Of course, if you're doing an electronic fund transfer, you can generate Form 9A and 9C, but it depends totally on the method of payment that you prefer versus what is generally preferred. So a highly recommended method of payment for any disbursements from trust account is definitely check or bank draft. Moving on, if it is paid from general or your business credit card or owner's pocket, anything that is not trust, basically, it is important to follow your bank again, whether it's going out of your general business credit card owner's pocket, even though it is not trust. There are 3 other banks that's involved in here. They're all termed as general or owner's pocket if it's your personal account. Recording the expense with the description, with the date, once you identify it in the bank. Recording the amount, including the appropriate taxes, which is basically whether it's taxable, classifying it as whether it's taxable or not taxable, which is tax exempt, and also ensuring that you have included details like method of payment, the reference number that goes with it, and whether it was paid from bank or credit card or owner's pocket needs to be definitely entered on the screen where you see all these options. If it was uLaw or any other practice management solution, I'm sure you'll find the dedicated fields to enter such information, as it's considered really important, like I already said at the beginning. Even though these are minute details like date, method of payment, and the reference numbers, but they matter high in value because it's something that you can track down in the later stages. So remember, if you're paying using trust account or general account, it is highly recommended to follow certain steps that we just discussed. And it is definitely going to begin with following your bank, making note of the transaction type, description, reference number, amount, whether you are charging your client a different portion, whether you're invoicing them a different amount with a profit motive. This is possible only if you're using a general account to pay that specific disbursement, or of course business credit card and owner's pocket, non-trust disbursement basically. And jumping to whether if you're using a trust, what kind of disbursements can go under trust, and what are certain points to keep in mind if you're disbursing money from trust, like there could be no profit, you're charging only actuals, versus if you're doing it from general business credit card or owner's pocket. So far, we've seen so many points that I just recapped quickly. I hope you're all following me. I request you all to enter on the chat window here if you have any such questions that I can take it at the end of the session. And if you're all facing any trouble hearing me for some reason, I've entered the audio coordinates here on the chat window. I can put them in again for you. I request you all to join in using audio coordinates provided here if you're facing any trouble hearing me. And repeating the topic for the day once again is Disbursements Demystified. It's a 1-hour CPD session accredited by Law Society across Ontario, British Columbia, New Brunswick, and Alberta. If you have any questions, I'll be happy to take it by end of the session. Please use the chat window at any time to put in your questions. However, I will return to it towards end of the session. Thank you. So moving forward, we're going to be talking about how to recover the disbursements. As it is, you have recorded it under the disbursement section, whether it is being paid from trust or whether it was paid from general cash other accounts. But at some point, you need to invoice your client to recover this expenditure. If it is trust, there's no recovery in this case, but at least you should issue your client with an invoice telling them this was disbursed from the trust account with the money that was available so that they're aware of what has been taken out of their trust account money. But if it is general, here is the most important point to note. When you're making payment from your general for a disbursement, many a times people get confused between straight away paying it out of trust, even though they have paid it out of general account. I'm not willing to confuse here, but I'm just looking to share the point of view that if there is a payment out of your general account for this disbursement purpose, it has gone out of your general and you should be recording it as a disbursement paid out of general. It cannot be disbursement paid out of trust just because you have transferred the money for that amount from trust to general. That comes later, or that part comes later on. When you invoice the client saying that, hey, I have disbursed $25 for making a photocopy payment or for making a courier charges or for filing fees, whatever it could be. I have made this payment on behalf of you as a disbursement from my general account. Hence, I am invoicing you for this amount, blah, blah. Like, for example, you're charging them $50 and you're incurring $25, which means a $25 profit motive is here, which is very clear. It happens only when you're using a general account. But end of the day, you're charging them this amount so that you can raise an invoice and transfer the money from trust to general. That is the third point you're seeing on the screen in front of you, which means after you raise an invoice, get paid for it from trust via trust transfer or by a client payment to general account. This could be both the things. Either the client could pay you for the disbursement into your general account, or if there's money lying in trust, you could invoice your client for this amount and transfer the money from trust to general. Besides that, one step ahead, if this money or disbursement was neither paid from your trust nor from your general, but is paid from your owner's pocket, which means your personal money was involved here, then you move the money from trust to general, and then one step ahead, go ahead and pay yourself, which is drawings. So remember to always follow your bank. That is the key point here. When you follow your bank, you record the disbursement as to whether it is trust or general. Then you invoice the client, let them know whether the money was taken from trust or general respectively. If it is trust, no further action after that point. But if it is general, you transfer the money from trust to general, so the respective credit has a debit from transfer from trust to general. And the last point here is, if the payment was made from your personal account, could be an owner's pocket, then you will transfer the money from your trust to general and then draw the money from general to pay yourself. Just to make sure you have all the ledgers and journals updated as per Law Society guidelines here. So it's very important to record the disbursement, raise invoice, transfer money, pay yourself. There are 4 steps involved in here. So that's why we always say follow your bank. When you follow your bank, there is no way you will get lost. Just make a duplicate or a replica of what happened in your bank. Got it? So now moving on to types of disbursement. Whether these are to be made from trust, these are to be made from general. What are these kind of disbursements that are made from trust and general respectively? For billable, let's say, for example, photocopies, they are mostly from general account. I'm taking an example of photocopies because I know many of us tend to charge this often to our clients because there's always photocopying involved in your work. So very simply, use only your general account for charging such disbursements. And if you're traveling to meet your client or for any other purposes, you want to charge your client travel time, mileage, which is of course for gas or for Uber, etc. Always use your general account. The cases when you use general account is also when you have a profit margin involved here. And if you're outsourcing any consultancy or third party that's involved in this file or matter, so these are typically the types of disbursement that is exposed to only general account. I repeat again, some things that involve profit margin, any outsourced third-party work, any Uber mileage for gas or travel time involved, again, only general. Last but not the least, more like photocopies, couriers, anything that involves, again, profit margin here, unit rate, only general. For both trust and general, billable, actuals, and outsourced consultancy, but only actuals again. So always remember, trust is only actuals. It's very simple to remember. You cannot make everything from trust, but if anything that is actual payment, you can definitely do that from trust. Proceeding ahead, that was about the types of disbursement. Proceeding further, we are going to talk about the ledgers that needs to report disbursements, especially client's trust ledger and client's general ledger. And we also have general disbursement journal, trust disbursement journal. And general disbursement journal, trust disbursement journal also has general receipts journal, because if you're having disbursements, there needs to be some receipt from the client or receipts into the trust or general respectively in order to disperse them. And then fee book, because disbursements are very clearly notified under fee book in our program. And it is required to show under fee book because if you raise an invoice, both fees and disbursements are recovered from the clients, and we're going to see that in detail as to how it is done over here, as well as when I go into uLaw to show you the same. Now that's what I'm going to show you in the next 10 minutes. Talking about ledgers. We all know we record the transaction under disbursements tab or disbursements section. You can say as you wish, but when you're recording these disbursements, what happens at the back end? You know that the client pays certain amount as a retainer, or they pay directly into your general account as a client payment, or there could be any other receipts that comes into your client's trust ledger initially for you to disperse. Or as you see here at the bottom of the screen, you're seeing an example of client's trust ledger and client's general ledger. Of course, what happens behind is always captured in reports like these and showcased to you. So client's trust ledger is nothing but any receipt or withdrawal that takes place directly from your client's trust account. There could be any receipts that come in as deposits and any withdrawals. So all of these are captured. Every transaction is recorded in both trust and general, and also dispersed directly. That needs to be recorded under disbursement ledger, as you see here. Based on the type of the transaction, whether it is out of your trust or into your trust, and out of your general or into your general respectively, and each ledger has the following details as you see at the bottom, with a date, with a description, whether it's a receipt or a disbursement, and a running balance that demonstrates the ledger balance. And you also see that a disbursement can happen only if there is a receipt. So either you are putting in your money or you're using the client's money. So when you look at the client's trust ledger, you see that trust has some money which you're dispersing eventually. When you come to the right-hand side bottom, when you're seeing the client's general ledger, you're seeing that you raise an invoice first in order to get paid by the client as payments on accounts. The following samples from the Law Society demonstrates a trust and general ledger. That's exactly how a trust and a general ledger looks. And the details that are captured are exactly as what you have entered them under the respective bank accounts. And whether it's a receipt or disbursement gets recorded under the respective dates and the types of or method of payment that you have recorded it as. Disbursement in fee book. We, of course, before we see fee book, we have to see journal. So when it is in journal, which is even more drill down details of ledger, when it's in ledger, you get to see what are the method of payment, the description and the receipts and disbursements. Whereas when you go in detail into the journal, these are much more detailed or drilled down version where you get to see the receipts separately and the disbursements separately along with the method of payment. These journals are mostly reviewed at the time of audits, as it has captured most of the data as to the source of funds, the method of payment, date and amount, as you exactly see here on your journal example at the bottom of this page. Journals are records of a single type of activity, like I already mentioned, either disbursement or receipt. But at the same time, you're able to record more information into it, like method of payment, purposes, and received from, which is source of funds. The following samples are again just as how Law Society demonstrates trust and general disbursement journal. So it is very important when I mentioned to you at the beginning of this session that having record the minute details such as method of payment, reference numbers, received from details, because they get captured and get converted or entered into such journals and ledgers that Law Society wants you to depict or showcase in those statements that they need as part of their complaints. As you all know, these ledgers and journals are part of the complaints documents. So it's highly recommended to not leave even a single field that you think is negligible. At our end, we all might be always running into some scenario where we are having to record the transaction in 2 milliseconds. But I would just say give it another 5 extra seconds and try to ensure you are recording the method of payment, reference number, a source of funds, who had provided you that funds with. These are certain information that will go a long way and get converted into information on journals and ledgers as you see here on the examples. I hope I've made that pretty clear. So going forward, you all would be practicing entering all these additional information if you have not done so far. So there's one more fee book, one more document rather, that is known as fee book, which also showcases disbursements that you have billed to your clients. So the fee book basically records, as the name goes, all the fees and disbursements, because as you raise an invoice, the details on the invoice gets converted or gets recorded under fee book as legal fees billed and disbursements billed, HST, whether it's part of fees and disbursements, and the total bill. So the fee book records all fees and disbursements raised in an invoice that needs to be recovered from the clients. Of course, eventually they are either transferred from the money that is paid into the trust, and a trust transfer is done. As once you raise an invoice, the general account shows an AR balance, which either needs to be satisfied with a debit from the trust account, with a transfer from trust to general if there is a retainer balance sitting in your trust, or the invoice is sent to the client and the amount is paid directly into the general account. So the fee book also records other details such as invoice numbers, the taxes, and the fees that are associated with legal fees and disbursements. And the sample that you're seeing here on the screen is exactly how a fee book will look if you're using our program. Has all the details, again, that Law Society needs or demonstrates a fee book as. So there are numerous documents that can showcase details regarding disbursements. One such document is ledger. You have trust ledger and general ledger, so that becomes 2 documents here. And over here, journals are 4, trust and general. That is, it gets recorded as with single type of activity, whether either it's receipt or disbursement. So it's trust receipt journal, trust disbursement journal, general receipt journal, and general disbursement journal. So you're left with 6 documents already, 2 ledgers, 4 journals, and 1 fee book, 7 overall, depicting disbursements as part of the document or reporting. Now, last but not the least, benefits of managing disbursements. Why do we need to manage disbursements when I'm more concerned about managing my legal fees or things like that? Of course, disbursements can play a big role if sometimes legal fees could be lesser and disbursements could be more for that specific scenario, for an instance, and you don't want to end up in loss if you're not recording it properly, so it affects your profit margin. Definitely getting paid for the expenses that you incurred for the client is important as much as you're getting your legal fees paid. There's a risk of paying these disbursements via general than trust, like I already said. Not all times you can use your trust. So if you're recording these disbursements as paid from general, you might as well record it properly so you have them paid out to you along with your legal fees. And disbursements can add to your profit margin if managed properly. For example, if you're using disbursements paid from general account, sometimes people tend to add admin charges or handling charges or photocopy charges, even though they have not incurred it. And it gets as part of the profit margin if it is being added properly. Finally, why are we managing disbursements? Why does it all have to happen in the first place? We all know it's about compliance and accountability. What is it that we are being answerable to, Law Society? To your own accountants, to your bookkeepers, to your auditors. Very important that you keep a track of these expenditures or disbursements that happens from your trust or general respectively. End of the day, it is also hassle-free, ease of use, and maintaining your books gives you such peace and relief that you have every penny that comes in and goes out of your trust and general recorded very cleanly, so there is no way your books will be left unreconciled. I hope I have conveyed the importance of managing disbursements, how to manage disbursements, what are the methods to manage disbursements in the last 45 minutes. I'm going to take the next 15 minutes to showcase how this is done using a program like ours, which is uLawPractice Management. If you're a current user, well and good, you're just going to enhance your knowledge. If you're not a uLaw user, I request you to sign up for the trial and make the best use out of it. Quickly going to stop sharing the presentation screen and jump into the uLaw program. This is my fictitious uLaw account. It is going to be used to showcase a simple example to you all to show how disbursements are handled, how these reports generate the information that we add as inputs and deliver us with outputs that Law Society is mandating all of us to generate these as part of the Law Society compliance documents. Quickly under contacts, gonna go ahead and add a new client, or I could also take one of the existing clients just to save a quick time. So let's say this is one of the new clients that is being created, has some matter events here. Going to be adding a quick disbursement. Before that, I'm going to show you that there is a new retainer, about $500 sitting in the trust account. We all see there's a trust receipt of $500. There is a flat rate of $565 already and a disbursement of $20.60. This is what you're seeing. Now, I have added a disbursement earlier as photocopies. And how was that added? It's very simple. Click on Add New Disbursement in the program under the matter. So these are matter or file client specific details to be added. You would be spending for Jonathan Anderson and you cannot go and add it under Jonathan Wills. This has to be completely addressed in the client's file. Hence, I'm doing it from the matter field or the matter tab and going into this field called add new disbursement, very, very clearly structured here, asking you first whether it has been withdrawn from trust. If there was something that you have withdrawn from the client's trust, well, go ahead, click on paid from trust. It would be like what we mentioned already for filing fee, for actuals. If this is something to do with the first check that you have issued from your trust, let's say this was filing difference or notice and paid to probably courthouse of Brampton. Print a check. uLaw also allows you to print check for disbursements. Make the best use of what is available in the program. Download the check and send it to the concerned department. Once that's done, you have already taken out of trust $200. So the remaining $300 is seen here as trust receipt. Earlier it was seen as $500. Proceeding one step further, let's assume you have some disbursement that was withdrawn from your general, cash or any other account. Could be even your personal account, or it could be your business credit card, whatever. This is the time when I mentioned that could be used with a profit motive. For example, there was some courier that was sent out. This includes just courier charges that you incurred, but you also want to include some admin charges because you took your time off to go and courier it to the client, which is natural. So if the courier costed you only $40 plus taxes, which you're reporting at the bottom, $40 plus taxes, 45.20. However, you're entering another $20 with it and saying that you are charging your client $60 plus taxes. Now, this is possible only from general because trust is all about actuals. However, this is not actual amount, right? You incurred actually $40, but you're charging your client 60 plus taxes. So this is the portion where there is a difference in amount that you're charging your client and the difference in amount that you have incurred. The top portion, remember always, is the amount you're charging your client. And the bottom portion is what you've incurred and you're reporting it to your books of accounts, either from your general account or from your credit card account. Both are bank. So under bank, you would see there is both these banks, general and credit card, but these are both business related bank accounts. However, if you have used your own personal account, it is always considered as cash, even though you could have used your personal credit card or personal debit account or actually cash. But whatever it is, it would be termed as owner's pocket. So remember to choose the bank as per what you have actually done in your real scenario. In actual scenario, what happened? Please follow your bank. That is why we say follow your bank. Follow either your general account or your credit card or your personal account. And then you will be able to record the transaction here accordingly. Save it. Now you see your disbursement gets increased. Now there are other types of disbursements that are termed as paid disbursements from general, actual mileage and units. So these are also something that is done from general, but like how from trust you are paying actually, which is actuals paid from trust. There are some expenditures that are actuals, but that cannot be done from trust, like Uber expense or your food expense or your, let's say, your gas expense to go and meet the client. There could be some actual expense that you incurred. However, that cannot be added from trust because trust, you can only add certain expenditures like filing fee, court fee, processor fee, etc. So there are certain things that I would be incurred from my general even though it's actual. So for example, let's say this was mileage. I am probably traveling 20 kilometers at 40 cents per kilometer plus taxes to meet my client. So the item name could be client meeting, traveled to meet client. gas expense, something like that. Okay, pretty simple, understandable. Here, the expense amount could be entered because you're also charging the client either the same amount or a different amount actuals that you've spent. Here, you have a choice to enter the amount and save it. You've added the amount in here. For 20 kilometers multiplied by 40 cents per kilometer. And the expense amount that you've reported goes into your general account because that's the one that I have clicked. If you go into your accounts, move from pool trust account to the general account, you would see the mileage recorded here as an expense, $20 plus taxes, $22.60. Since it was general account and it was mileage, I could enter a different amount than what was actually spent. But just watch me do one more thing. This is general. Here I can also enter actuals amount. Let's say, for example, this is billable. This is not mileage. Here I don't have an expense amount that I can enter at the bottom like I did the previous time because billables are always actuals. So let's say here I used process server fee and it was $200 or $120. So it is tax exempt, you can enter tax exempt. But there is nothing at the bottom for me to enter because this is actual billable time that I'm entering here. Saying that was email transfer, enter the reference number. Remember I said the reference numbers makes a big difference. And who did I pay it to? Could be MNP, process server. Save it. Now you see that this disbursements gets added on top of the earlier existing one. And if you go to accounts, you would see that even though I didn't report any expense, it still gets added here as process server fee. So that is the level of information and details that you need to pay attention to. And one other thing that is probably what we discussed, actually two other things. I can wind up with that, I think. But what is it is paying a third-party consultancy fee. If you're making a third-party consultancy fee, there is always room for making profit here. So when you click on consultancy expense, you could say third-party, or let's say, for example, transcriptionist. Okay, and or translator. And you're charging your client $200 for this work, excluding taxes. However, you are paying the translator only $150 plus taxes. So, or it could even be $150 tax exempt. So there are components where you can definitely add your consultancy expenses based on the real scenario that actually took place and how was the payment made, whether it was made from your general account or from the credit card or from your personal account. Again, choose respectively. Let's say this was an email transfer sent from your general account. Please enter the reference number again and say it was paid to, suppose, Aisha, and save it. So Aisha will be probably one of your third party added in the contacts. And then when you go into accounts, you would see that 150 plus taxes, 169, or 150 without taxes, translator, 150 would be here recorded. Lastly, if you're using disbursement to make any prepaid purchases, if I had any prepaid account, into which I have deposited some money from my general account by beginning of the month, and by end of the month, I'm making some charges, like say searches fee in case of real estate transactions. And then I'm charging my client about $90 plus taxes. However, I incurred only $75, that too tax exempt. You come down, there are no bank accounts here for you because I'm not making a disbursement from my bank, but prepayment to disbursement. Please make a note that when it is prepayment to disbursement, it is from the prepaid account. It is not from the bank account. So there is no bank option here for you. These are the options that's available. Since it's a prepaid account, under deposits and prepaid, I'm choosing the respective prepaid account that I've already entered. Let's say this is probably TerraView, and save it. You would see that this $90 plus taxes is billed to the client. However, if you go into accounts, it's not seen in your general account anywhere like we did for the other 4 or 5, because it is in your TerraNet or TerraView account. So the searches that I just added under Jonathan Anderson, $75 is right here. So that's the kind of category, or that's the kind of categorization that is required to go into categorizing your disbursements. And end of the day, a clean book is where you follow the bank and the method of payments and the amount and the other data that we captured in the last few minutes while doing these examples with you. I'd like to quickly pause here for a moment to see if we have any questions in the last 1 hour. I'm almost to the fag end of it, but I just want to complete it by saying, let's preview an invoice to see what has been billed here. I added some legal fees as flat rate. Initially, I told you there was a $500 plus taxes. And then there's a retainer here with the photocopies and other disbursement charges. That's nicely laid out. The retainer below that. I made a payout from trust for filing fee. That is also seen here. And the balance that's available in the trust for you to transfer, as well as the amount due from the client. Now, if you go in back here, you could complete the invoice, send it to the client, move the money from trust to general, and accept the rest of the payment from the client into your general account, because you're done with the work and the client typically owes you remaining money, as you see on the top, and that can be paid to you directly. So if you have a practice management or a legal accounting system that is going to help you capture the details then and there and ensure your client ledgers are also actively recorded, just to not miss what we just saw, going to accounts, monthly compliance, most importantly, the client's trust ledger, general ledger, and the 4 journals and the fee book. If I download the fee book with today's date, I can exactly show you where are these details. Since I haven't raised the final invoice, I just want to quickly do that. I'm sorry, I'm probably a minute delayed, but I want to quickly show you how this looks on the fee book with the disbursement captured, so you could all follow the same to ensure that the disbursements are not left out and it is being captured appropriately with the respective bank details. So go back into accounts, go into compliance, monthly compliance, client's general receipt and client's general disbursement. Everything has all the details here. Just download for today's date. and you would be able to see all the details here along with the disbursement. So all that I just did enter for the translator fee, for the process server fee, and the client meeting that we traveled to, the TerraView charges if I did searches, the courier and admin charge, everything is captured. So you see the difference in the method of payment. If I have not entered any reference number, it comes as 0, which is not looking that great when compared to the email transfer reference numbers that I entered here and who I've paid it to. All these are minute details sitting in there, but makes a lot of difference when an auditor or an accountant is viewing this records. So like I said, I would like to end this session saying, please make a note of these disbursements that goes out of your trust or general or any other personal account respectively, and ensure that has been recorded from time to time and that you're able to capture the minute details as possible, and you would be able to take it from there. I'm so sorry, I'm just looking into the questions. We do have a few questions coming here. Is there a section there where it calculates the cost for you? Yes, Rosa, I just walked you through that. Probably you've asked this question much earlier, but I'll quickly show you that. Hello, thank you for the question. I would like to quickly end the recording so that it's not too big for people who are going to view this a little later. So with all due respect, I'm